today we'll be looking at one of the most profitable chart patterns that I look for as a swing trader. It helps me locate my entry points, exit points, and hopefully by the end of this video, you'll be able to use it too. I'm Rob with MGE Trading, and I am super pumped that you stopped by so I can teach you the basics to swing trading the stock market. And if you find value in this video, please go ahead and like and subscribe and press the bells for notifications. Oh, and if you want the free stock through the Robinhood app, go ahead and click my referral link below and you'll get your free stock today. Okay guys, so we will discuss the ascending and sideways channel chart pattern. I am on the Webull desktop platform as my screener. I am on ticker symbol AMD. Now the channel is essentially, it's a price action encompassing the upward slope parallel lines. These are going to indicate the resistance and support. Now let me draw that out. So this chart essentially making higher highs and higher lows, just like that's just what we like to see, some volatility in the price action. So we're going to connect the swing lows with this line. I'm gonna make it yellow for y'all so you can see it better here. Okay, let's see if I can't thicken it out a little bit. Okay, and I'm gonna have the upper part of the channel on the swing highs here and make that yellow, thicken it out. Okay, so the technical analysis begins by connecting these trend lines by the bottom channel and the upward channel. So as you can see, this chart is doing exactly what it always does. You know, it rallies up and it pulls back and rallies up and pulls back. And when we first start trading, what do we want? Usually we'll get a nice entry point here and we want it to shoot right up. But that's not the reality. We all know what the reality is. It's going to pull back, you know. And if you would have came in at this entry point right here, you could have gotten this whole, this is at $16, $34, so 2x your profit. But most traders come in and they start dipping, so they freak out and they sell. And it's just how you play. We would have entered right here, because remember, at this day we don't know that's going to go upward, right? We don't know it's going to go upward. All we know is there is this bottom channel and this upper channel. Let's see, what else do we know? Is there any prior resistance? So it seems like there's a resistance in this line right here that you could have used. So right here, okay, there's a prior resistance right here, way back. Looks like in October 2018, the prior resistance. So maybe that also would have helped you make an entry point right here in this on this day. Now, when it gets really interesting is if this would have rallied up all the way up here and it would have broke through right here. And this is where I would be very interested, because a bullish candle right here would have suggested a continuation, right? A continuation that maybe would have rallied right upward. So we would have entered right here, and if it would have broke through this trend line right here, and we would have saw a bullish candle indicating that it would have broke through, we would hope to see a continuation. Another indicator that helps us traders are these SMA lines. This right here is a 20-day simple moving average SMA, the 50-day SMA, and the 200-day SMA. It's the average price of the closing prices in the last number of days. So the 50-day moving average is really just the average of the last 50 days of its closing prices. So a lot of traders will actually use that as an entry point indicator. You know, if it tags the 50, if it tags the 20. Now, if that's the way that you like to trade and it's working for you, by all means, go ahead. By all means, go ahead. You know, there's no exact science. There's always chart patterns, but the actual entry point is always different per trader. 4 things. Number one, connect the trend line to your swing highs, and they're going to serve as resistance. Okay? Then draw a trend line to your swing lows, and they're going to serve as support. Okay, so number three, a chart that has this pattern should only be on your watch list, okay? Only be on your watch list until, now this is very important, until it breaks through this resistance. Once it breaks through resistance, we still wait for a bullish candle or some kind of confirmation that confirms to us that it is in fact a buy, because this is in fact going to go higher. It's going to have this continuation pattern upward. And that's where the money's going to be made. That's when it rips right through. Okay? It's going to rip right through here. And what happened down here did just the opposite. Okay, it did just the opposite. It broke through the support, and now we don't know when it's going to stop. It's going to test new resistance. Okay, it's going to test new resistance, and it's only fair. It's only fair that I showed you a chart that failed. Okay, because sometimes it's not going to work the way we want it to work. We want it to break this resistance here, or maybe here, or maybe here. And after that, that's when we know our pattern is telling us, okay, this is a time to buy. This is a time to buy. This is a time to buy. So it's really important for you to respect your stop loss. What does that mean? Respect where you plan to take your losses and move on. Where you plan to say, okay, this isn't working the way I want it, so maybe I'm gonna sell. This is our 31. This is our 31. Maybe you said, okay, I'm gonna sell $2 less. So maybe at 28. By the time I got 20, I was gonna sell. For a dollar less, I'm gonna sell. Or some kind of indicator. Okay? I'm not telling you that's the exact science. Like I said, it's different for every trader. Okay? All right, now number four, use indicators that work for you. So if you like to use SMA line, like maybe over here, right when it broke on these SMA lines, you wanted to put an entry point, and you were just going to ride this wave and also hope that it's going to break through the resistance, or if you're going to use a prior resistance over here, whatever works for you. You try your method, try what's working, and if it's working for you, be consistent and make that one of your actual methodical decisions in the future. But for me, I would have waited for it to break through. Once it broke through, I would have waited for some kind of confirmation candle, and I'll go over some good confirmation candles in another video. Some kind of bullish engulfing, some kind of candle that said, okay, we're ready to just go right up. And one thing I'm going to note here that maybe other YouTubers might not tell you, when it does break through, you want to, sometimes and more than likely, it will pull back just a little bit. Okay, it'll pull back just a little bit, just like we see this whole thing, this whole channel. It's going up, it's uptrend. Well, then the bears start winning, then the bulls start winning, the bears start winning, so on and so forth. So we know it's bound to pull back. So let's say it broke through right here, and you had a green candle, nice green, some kind of bullish candle. Well, some people are going to get in, new traders are going to get in right here, and then it's going to pull back a little bit, and they're like, oh, then they sell right here. But then it just takes off after that, rips right through, takes off. And they're like, wow, why can't I figure it out? Just prepare for a little pullback, okay? Even when it breaks through, it's not going to just go, okay? Thanks for swinging by. If you didn't already, please give me a like and subscribe to my channel if you want more quick and easy tips to get you started in swing trading in the stock market. I'm Rob with MG Trading. I'll be back with another video soon. Peace.